Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 14th of November 2016 and we're briefly covering the topic of how the Muslim population could cause gold prices to soar. We owe one of our subscribers, Michael T., a thank you for reminding us of this. Sharia law considers gold a Ribawi item. That means Muslims can't trade it for future value or for speculation. They can, however, use gold as currency and own it as jewellery. As a result, for years, Islamic investors and financial institutions have shied away from gold-related financial products. The Accounting and Auditing Organization for Islamic Financial Institutions, AAOIFI, which establishes Sharia standards for Islamic finance, and the World Gold Council are currently drafting a Sharia standard on gold. On the 17th of October of this year, the AAOIFI had adopted an exposure draft and made it available for 1 month for feedback, and will consider it again at a meeting to be held prior to the end of this year. The new standard, which will allow banks to issue Sharia-compliant gold products, should ease much of the confusion that abounds. According to the World Gold Council, it will serve as an internationally recognized consensus on regular gold savings plans, gold accumulation plans, gold certificates, physically backed gold ETFs, certain gold futures, and gold mining equities. The potential Islamic gold market is enormous. Today, the world's 100 million Islamic savers and investors hold almost $2 trillion in assets. Standard & Poor's projects that figure could reach $5 trillion by 2020. Another industry estimate forecasts that the number will be $6.5 trillion by 2020. This represents a potentially huge new demand for gold and gold-based financial products if the draft is finally accepted. A recent report by Ernst & Young stated that 93% of Islamic financial assets are held in 9 core markets: Bahrain, Qatar, Indonesia, Saudi Arabia, Malaysia, United Arab Emirates, Turkey, Kuwait, and Pakistan. Money managers in these core markets are generally limited to investing in Sharia-compliant assets in equities, real estate, and Islamic bonds. Large Muslim populations in countries with fluctuating currencies, such as Malaysia and Pakistan, present a unique opportunity for gold-based Sharia-compliant products. This is because gold is recognized as a store of value and a global currency, so its value may not fluctuate as much as their local currency. We must also remember that although there are currently around 100 million Islamic savers, there are approximately 1.6 billion Muslims worldwide, or in other words, 23% of the world's population. The main reasons investors purchase gold are the lack of low-risk alternatives in a zero-interest rate world, stock market volatility, global economic concerns, diversification, and as a form of insurance. Now, we are not saying for one moment that if this guidance is formally passed, there will be an immediate and enormous demand for gold. What we are saying, however, is that over time, more and more Muslims will be investing in it in considerable numbers, which ensures that regardless of whether there is an economic crisis or not, gold has a very, pardon the pun, shiny future indeed. Just imagine the impact if just 5% of that envisaged $5 trillion is added to gold purchases by 2020. Which is why we have said from day one, gold and silver are great long-term investments, providing you do not overcommit your resources and can afford to put those assets away for a number of years. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.